Hello, everyone. Today on the final bar, we'll talk about a market pushing onward and ever upward to the upside, with the S&P accelerating above 4,500 today, pulling back a little bit in the last hour. But overall, the damage had been done to the upside. Tech, but real estate, actually the number one sector today. We're going to look at some of the sector themes, also some of the big picture themes, charts like gold that are coming out of fairly depressed areas, energy and other cyclicals giving it back today. Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to the final bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a cloudy Redmond, Washington. Thanks for joining us every weekday after the close as we focus on the market activity using the power of stock charts. We focus on measures of price, breadth, sentiment, trend, momentum, all the tools of the technical toolkit to try to understand these markets in uncertain times. Overall, we finished the last week in a position of strength, the S&P pushing to the upside. In our Friday show where we wrap the week, we talked about the overall conditions where breadth measures, while still mixed, overall a lot less negative. There had been quite a differentiation or quite a divergence between stronger price action on the S&P and the NASDAQ, weaker action in breadth indicators and things like small caps. In the last week, I think you started to see a rotation with small and mid caps really starting to rotate higher, something like the high yield ETF breaking to new swing highs for the first time in a couple months. Today, you get follow through. You get the S&P moving higher and then pushing further to the upside. We're going to break down the key charts in the macro perspective, the sector rotation, and stocks here in a minute. But first, let's talk about the upcoming schedule this week. We have great guests this week. Tomorrow, on Tuesday, the 31st, we have David Auerbach from the Daily REIT Beat. Does a great job of breaking down the real estate sector, which is actually the third best performing sector year to date so far. On Wednesday, it's Options Day. We have Bob Lang from Explosive Options. And then on Thursday, I'm super excited to talk to Denise Chisholm. Denise is a former Fidelity colleague of mine. She is their sector strategist, and she's going to come and share some thoughts about sector rotation. Should be a lot of fun. If you missed our latest episode of The Pitch, that aired on Friday, we had a blast. Grayson Rose from StockCharts, T.G. Watkins from Simpler Trading, and Leslie, excuse me, Leslie, who's from, boy, I'm blanking on Leslie's firm. It was a fantastic time, though. Join us or check out the video. If you go to stockcharts.com/thepitch, you can get all the latest videos of that episode and then all the previous episodes as well. A lot of good discussion, though, on some stock picks and ETF picks, given the uncertainty that we've had recently. Let's continue on and go to our market recap. So on Monday, we like to hit the market from three directions: top-down macro, sector rotation, bottom-up stock picking. Let's start with the top-down perspective and focus on some of the key charts. So the S&P 500 finishing stronger today, closing just below 4530, but overall certainly stronger than Friday's close and pushing upwards through really the course of the day. Interesting, though, a bit of a divergence again, though, where you have growth leading value overall, although you had something like real estate at the top. Technology, consumer discretionary, communication services, sort of the growthy stuff was at the top of the list. Underperforming, you had value sectors like financials and energy, and mid caps and small caps actually lagged. So you had one of those situations that is a familiar day if you've been following the markets for a while. We have the NASDAQ pushing higher, the Dow actually going lower, and then the S&P 500 stuck right there in the middle. But overall, again, netting out to a positive day. The VIX is actually back down. It was above 20 not too long ago. It's back actually touching the 16 level, so coming further downwards. Interest rates lower today with the 10-year yield back below 130. That finished through the course of the day around 129. And the TLT, the bond price proxy that we tend to use, back higher about 0.25%. The dollar essentially flat from Friday's close. Gold and precious metals weaker today, although the rest of commodities overall were sort of mixed. Oil prices actually came up today with the USO up about 0.5%, although the energy sector was down. Cryptocurrencies also mixed. Bitcoin was actually down although it accelerated to the upside through the course of the U.S. Equity trading day. Ethereum really pushing to the upside fairly aggressively as well. But you can see the mix of green and red showing you the mixed results that we've seen from cryptos. So let's look at a chart of the S&P 500, just talk about where we're at. So, we've talked about the overall position of strength, and I've mentioned this quote many times, but one of the famous quotes about bull market behavior is the most bullish thing the market can do is go higher. So if you know nothing else about the market conditions, you know nothing else about breadth and sentiment and how individual stocks are trading. If you look at a chart of the S&P, if we continue to make higher highs and higher lows, we are in an uptrend. When that stops happening, we are no longer in an uptrend. And if you keep it as simple as that, you may not pick the actual top to the day, but overall, you're going to be on the right side of the major trends. And if you look at what's happened with the S&P, we're seeing higher highs and higher lows pretty much every month. The S&P has made a new all-time high that has continued so far in the month of August, really completing with today, August 30th, pushing to the upside and making a new all-time high, new closing high as well. So what would cause this chart to look different? So in the situation where the S&P or in a chart is in an uptrend, I always tell people to think about the emergency planning now. When things are good, when the plane is flying straight and level, that's when you plan for emergencies. You don't want to wait until the engine cuts out to figure out what you're going to do in that scenario. So what would cause this chart to look different? Well, number one, we would have to make a lower high, right? And or the other thing is make a lower low. So let's look at where those levels would be. So far, today's high 45.28. So at some point, we attempt to make a new all-time high and we fail, right? We make a lower high. That would start to look like a head and shoulders top. That would start to look like an indication that the market is unable to attain its previous high. That is a market that is starting to show some challenge. That has happened a couple times, but not often. Most times when we've tried to make a new high, we have successfully done that, at least so far year to date, 2021. So a failure to make a new high would be check number one. A new swing low, which at this point would be below the mid-August low, which is around 43.60. We need to undercut that low to indicate a lower low. And at that point, you'd have a lower high and a lower low. That would be Charles Dow's definition of a new downtrend. The third thing I would say is break some sort of trailing stop. And I think the best trailing stop, at least I've seen with the S&P, is super simplistic, which is the 50-day simple moving average. We have pulled back to the 50-day many times so far year to date. Every single time we've closed below it, only one day at most, and then we've broken right back to the upside and continued this uptrend. So those three things would need to happen. And once all those three things start to happen, you will hear me become a lot less supportive about market upside and start talking about the potential for real downside as we've broken support. Now that is let's call that a 3 to 4% drop to the 50-day moving average, probably about 4%. 4 to 5% would take us below the August swing low. All of those things would have to happen, which again, on some individual stock charts might actually feel like quite a bit more of a distribution. But at this point, until those three things happen, the trend is positive. And I think you should plan for that. We're seeing software names go higher. We'll talk about that in our shifting stocks segment. A lot of the ideas that were thrown around on the pitch on Friday, good charts that are continuing to break higher. Again, until that stops, I think the trend overall is positive. Now, when we look at some other asset classes, I mentioned high yield. We talked about this a little bit on Friday. The HYG is basically junk bonds. It's high yield bonds. So bonds issued by the sort of the higher risk companies, the smaller, more speculative stocks. So think of it as sort of like looking at the small cap index for stocks. You're looking at the high yield corporate bond ETF here. It broke to a new high. So what's interesting is this ETF made a new high in early July. From there, it's actually been sloping downwards. When we talked about some of the divergences, high yield debt actually trending downwards while stocks were actually breaking out. There's a bit of a divergence that has now dissipated. That's now resolved as the high yield index has gone higher. I would also mention things like the mid cap index, the small cap index. The mid cap index is testing all-time highs from April. The small cap index is not quite there, but is getting there. If we do $SML, if you look at the Russell 2000 ETF, IWM, started to rotate higher, making new swing highs. And the kicker for all of these, can they make new highs and break on? So the small cap index topped out in March. The mid cap index topped out in April. While the S&P and the NASDAQ going higher, these indexes have not been able to do so. Seeing those re-emerge and joining the S&P making new all-time highs, I think would be a strong signal of equity strength going into year end. At this point, it's attempting; those things are attempting to break higher, but not quite doing it. So that is our market recap, talking about the big picture. And again, the S&P pushing higher today, overall in a position of strength, growth leading the way. And we're going to get to sectors here in a moment. But some of the confirmations I'm seeing from things like high yield ETF are encouraging. Mid caps and small caps joining the party and pushing to the upside would be certainly compelling as well. Our next segment is called Sector Setup. So step 2 on a Monday is to focus on the sector distributions, the sector rotations, see how these things are performing relative to one another. If you look at the RRG, so the RRG, if you're not familiar, is a beautiful visualization designed by Julius de Kemper, who's one of the fellow StockCharts contributors. And if you would talk to Julius, he would tell you that this is not a trading system. This is not a trading plan. This is a visualization. This doesn't tell you necessarily all the answers, but it tells you what questions you should start to be asking as an investor. And what I love about the simplicity is looking at the 11 S&P sectors rotating around the crosshairs in the middle, which is where the S&P 500 is. When we talk about sector rotation, this visualization actually shows you the rotation around the S&P in the middle. So what is it telling us right now? Further to the right is stronger relative. Moving northeast, or at least moving to the right, is a strengthening relative trend, an improving trend. So if you look here, you can see the XLK and the XLV. These are the strongest relative performers in terms of their most improvement. So when I'm screening for ideas, when I'm looking for charts that are breaking out, I'm not surprised that a lot of the most impressive rotations that I'm seeing are in technology, things like software and others. In healthcare, things like supplies and equipment, but also pharma and others. Catalent, CTLT comes to mind. Charts that are rotating higher and breaking new swing highs. So those are certainly the 2 most improved sectors looking at the weekly data. Real estate remains the strongest sector in that it's farthest to the right, but you can see it's headed in the wrong direction. So the relative performance still over the long term, very impressive, but the momentum is going the wrong way. It's actually heading southwest, and things that are heading southwest means the relative picture is deteriorating a little bit. That's why you can see the most lagging sector, or the least relatively strong sector, is the energy sector, the XLE, which had been way over here in the leading quadrant, has rotated into the weakening quadrant, really accelerating to the downside. Now, what we talked last week about some of the bullish divergences, and we'll look at the chart of the XLE here in a moment, you'll see what I mean. But when we talk about bullish divergences, we're talking about where the price is deteriorating, but the RSI, the measure of momentum, is starting to slope higher. You're seeing that on things like energy. You're seeing that on groups like airlines and a lot of individual names as well. Today, you're actually seeing them give back some of the gains that they've given recently. But overall, the bullish divergences, I would argue, still in play. And it would be interesting to see if those play out. If you start to see a rotation higher, that could speak to strength in cyclicals going through year end. And that was one of the themes that came out of our video, or our discussion on the pitch on Friday, was that potential rotation away from growth and into the cyclicals, some of the more value-oriented areas of the market. In terms of areas for sort of emerging strength to look for opportunistically, utilities is an interesting one that's actually in the improving quadrant. Last week, John Kosar, one of my guests, I asked him, given all the uncertainty, all the rotations, all the the different scenarios, where did he see opportunistically? He actually answered utilities, and I was surprised, thinking it would be either the growthy stuff, tech, the FANG stocks, or it'd be the cyclicals, things like industrials or financials, perhaps playing on higher rates. His answer was utilities, which are dividend-paying stocks, higher income opportunity, potentially not huge price returns, but overall the total return picture could be pretty attractive, especially if the market starts to pull back a little bit here, August into September, and maybe into October. So interesting to see the relative picture improving in utilities. The next thing we like to do when we talk about sectors is look at the 11 S&P sectors using the candle glance function. This is a beautiful way, by the way, if you have a portfolio, if you have a watch list. One of the lists I like to look at are recent IPOs. This is essentially taking all of those charts, throwing them on the screen together, and starting to see what patterns that emerge as interesting to you. It's a great way to look at a group of stocks and try to find outliers, or in our case, look at a group of ETFs, look at a group of sectors, and focus on what looks similar and what looks dissimilar, and identifying where you see opportunities for differentiation, right? Where there are opportunities that are different. So, the first thing I'm looking at when I'm looking at this list of charts, this view of charts, which ETFs are in an uptrend, making new highs recently above 2 upward sloping moving averages. And for the most part, it's 2 main buckets. I would say the 3 that stand out to me that fit that criteria are communication services here in the upper left, technology here on the right side, and then healthcare. These are the three sectors that have been in fairly consistent uptrends, even though they've pulled back at some point over the last 6 months. Nothing much. They've all remained above their 50-day fairly consistently, and they're all in a position of strength. What's really important, however, when you look at sectors on this basis, is to look at the chart and focus on the relative strength, because it's very easy to look at a price chart. Look at the price chart of consumer staples. It actually looks pretty good. But if you look at the relative strength, if you look at how staples has performed relative to the broader market, it's a lot less impressive. So it's important to look at this relative line. This is just a ratio of the XLC versus the SPY. So this sector versus the S&P 500. And you can see it's just starting to rotate higher, but overall it's basically been in line with the market for the last 6 months. So communication services, not a bad place to be. You're not really gaining anything relative to the S&P 500. You're sort of keeping in line with it, which isn't bad, but it's certainly not allowing you to outperform. Compare that chart to the chart of the XLK and look at the line on the relative line on the XLK for the last 3 months. You can see why this seems like a much greater opportunity to outperform, because these are stocks where the relative line is actually sloping higher. These are charts that are breaking out and are actually performing better than the S&P, which is going higher, obviously, as well, as we talked about earlier in the show. The XLK, there was this stretch here at the beginning of 2021 through about April or May. This is when all the cyclicals were really leading higher. This is when the NASDAQ started to underperform a little bit, the Qs especially. And you can see the XLK actually made a new relative low in May. That was literally when financials made their peak. Look at the chart of Goldman or JP Morgan or one of those, or the XLF. You'll see the relative line slopes higher into May and then rolls lower. So emerging strength in technology, I think, is impressive. When we come back from the break, we're going to look at a couple of stocks within that sector that have performed particularly well. We'll be back with you in 1 minute. Close. I'm your host, Dave Keller, here at StockCharts.com. I have to apologize. Leslie Juflas, founder of Trading Live Online, was our third panelist on the pitch. I'm so sorry I blanked on that as I was mentioning it earlier. But again, go to StockCharts.com/thepitch for those recent videos. Really great discussion on Friday. Also, a couple quick announcements before we get to our next segment, Shifting Stocks. First off, if you have questions for us, we would love to answer them. Nothing is out of bounds. Questions on market history, on technical indicators and technical analysis best practices, particular charts or ETFs that you're looking at, we can help point you in the right direction the best we can. You can get your questions to us a couple ways. First off, via email, thefinalbar@stockcharts.com, via Twitter @finalbarsctv, via YouTube. Just go to our YouTube channel called Stock Charts. Watch any of our videos, put a comment right below the video. We'll capture all those questions. We'll hope to answer one of your questions in our next mailbag segment on Tuesday's show. Also, please go to StockChartsTV.com. That is our on-demand platform. You can access it via our website. Use your email account, use your email address, set up a free account. You can watch all of our great content, special events like The Pitch, our mid-year market outlook, our year-end specials, great shows like The Final Bar, Stock Charts in Focus, and many others, and also our great guests. Go to StockChartsTV.com or just search on any of the app stores for Stock Charts TV on demand. Let's continue on with our next segment called Shifting Stocks. This is where we focus on individual names. So the progress on Monday is to think about the big picture, then to think about sector and group rotation, then to think about individual stocks. And this is a small summary of the general process that I follow analyzing charts. You start big and you go small. You start macro and grow micro. And this is a process that I found to be really helpful. The more you stick with a consistent routine, the better off you're going to be over the long term. We're going to jump around quite a bit because I have a lot of things that came up as I was analyzing charts over the weekend and through this morning. But starting off with some of the thoughts that were shared on the pitch on Friday, it was a great discussion. I think this is an interesting time because you have the S&P and the NASDAQ breaking to new all-time highs. You now have mid caps and small caps starting to confirm those. I think there was an opportunity Thursday into Friday with the Fed comments from Jackson Hole to cause the market to come off. The opposite has happened. The Fed has somehow communicated that they are really interested in changing their interest rate policy, but not anytime soon. And the market is reacting in a big way to the upside. And overall, that's fine. The trend, I have no problem following the trend until exhaustion. The trend appears to be continuing higher. With a couple ideas that came out of it, Leslie Juflas was talking about a bit more of a mean reversion. Two of her ideas were actually shorting Apple and going long gold stocks, things like Newmont Mining. And when you look at a chart of the GLD, this is coming off of a fairly weak level, right? The gold names and gold ETF, for sure, the GLD has been in a bit of a downtrend. What's interesting on the chart of Newmont Mining is you're actually approaching previous support. Now, this is a higher yielding stock. It's yielding just over 3%. So a lot of times on higher yielding stocks, I like to put the underscore right before the ticker. What that does is it unadjusts the data, which basically, usually when you look at a price chart on StockCharts, it's adjusting for dividends and splits and all of that kind of thing. Sometimes it can be helpful to kind of strip all of that out and have the dividend adjustments or the dividend gaps back on the chart, because then you can actually see where the stock was trading at different times in history. And if you're focusing on support and resistance, it can be a great way to make sure you're focusing on the right level. So if you look, Newmont Mining has found support a number of times, sort of in the range. We're in that sweet spot. It was around 52 back here last June. It was around, let's say 57, 58 here in October of last year. Here around 57, 56 a number of times, got down to the swing low at 54 there in March. We're right back at 56, which is sort of in the general range of all of those previous lows. So could be an interesting mean reversion opportunity. In general, I like to look for things that are really rotating higher. I'm as much as it can be interesting to buy things at the lows, I'm happy waiting until you see signs of accumulation. That's what I would be looking for on the chart of Newmont Mining, right? You keep getting oversold, make a new swing low and don't become oversold, which would be a bullish divergence. That's what we've seen in some of the energy stocks, which we'll look at here in a moment. Something like the MACD or the PPO giving a buy signal, which really hasn't quite done yet. Those are some of the things I would personally be looking for there. In terms of other things that have been relatively beaten down, the energy sector has certainly been underperforming. Here's the relative strength. At the bottom, you can see the last couple of months, the sector has been underperforming. You can see the RSI became oversold on the sell-off there in July. But on this last swing low, where the XLE tested its 200-day and was pushed back to the upside, you can see a higher low. You can see that the RSI was not oversold in that condition. And that situation where you're oversold the first time, you are not oversold the second time, and the price has gone lower is called a bullish momentum divergence. The last time you've seen that on the XLE or some of the major names, things like Valero and others, was back here in October of last year. This is when everyone had written off energy, myself included. There was just no reason to consider wanting to own a sector that was breaking down to new swing lows while everything else was kind of pushing through to the upside and was up near the swing highs, at the very least testing their June highs. You can see, if you remember what happens, energy, financials, the cyclicals really jumped higher and then led the way for the next 6 months. Actually had a great string of relative performance going through sort of the late spring, early summer. Interesting that we see a similar pattern now. Again, I'll be looking for a higher low. I'll be looking for some sign of accumulation, breaking above the 50-day, breaking above the swing highs around 50 would all be encouraging signs. We're really close, but not quite there. And that's why I think it's an interesting sector to watch this week. Other things that came out, and I'm thinking of T.G. Watkins from Simpler Trading. The name that stands out to me would be Etsy. He had a number of stocks. Most of his were in the consumer discretionary space, and I actually thought this was an interesting rotation higher. Etsy actually pushing back to the upside today and breaking above recent swing highs from June and July. Getting above 210, I think, is a key rotation. So outperformed today, pushing ahead of the market and getting above a swing high, I think, is overall a really healthy move in the chart. It's really rotating in a position of strength. And what's interesting about that chart, it reminds me about some of these others that are sort of in a rounding pattern. Regeneron is one we've talked about a number of times. It's actually making new swing highs again today. But see this rounded pattern of a change from distribution to accumulation, which is kind of interesting. RGEN is maybe a little further on here. This had this rotation back here and then broke to new highs, and now has certainly followed through to the upside. That's an interesting one. The first time I actually found RGEN was I mistyped. I had a fat finger moment, and instead of typing REGN for Regeneron, I typed RGEN, which was Repligen, and I was like, oh, it's another good chart. It's mix the tickers into a bag, and any of them come out strong. But that's an interesting one as well. And others remind me of this sort of this rounded pattern. Catalent, which is one of the pharmaceutical names that has rotated higher very nicely. So I think there are some interesting stocks that are not super overextended. They're ones that are more rotating higher. And on some of the stocks like Valero energy stocks, these are ones that are sort of back here, right? They haven't really rotated higher. So seeing that change to a period of accumulation, doing things like what Etsy and others have done, I think could be important. My third guest on Friday was Grayson Rose, and I'm thinking of things like Bug was one of the things he talked about. This is the cybersecurity ETF making new highs again today. Again, a nice basing pattern here from December, January, February. We retested that level, broke up down to the 50-day, and now rotated back to the upside. Biggest holdings on things like this are like ZS, Zscaler, FTNT is in that. I think Crowd is in there, CrowdStrike Holdings, and you can see all of these breaking to new highs. So when you look in the software space, cybersecurity, you're certainly seeing strength. So a lot of the growthy areas, we don't have time to go through many more, but that's where I'm seeing some opportunities as well. Boy, the shifting stock segment goes by so quickly. I would love to spend so much time talking about those charts. I just encourage you to screen for ideas as best you can. We need to finish the show though and go to the 3 and 3 charts in 3 minutes. Here we go. Chart number 1 is Apple. I didn't get to any of the FANG stocks in our shifting stock segment, but if I had, I would have focused on there. When I think Apple, I think charts, there's 2 buckets of charts within the FANG stocks. Think of those 6 stocks that I call the FanMag stocks, really. There are stocks that are in extended uptrends, things like Facebook and Alphabet. They're really just consistent winners going to the higher. Microsoft, I probably put in that group as well. Apple is one that's actually been relatively stable. This has been a sideways pattern of sorts, now resolving to the upside, making new all-time high, getting above that key 150 level today. I think that's a really impressive one to hold. As long as it holds 150, this is a really strong chart. Again, in mega cap stocks, there's a career decision you're making as a money manager, benchmark to the S&P, and not owning this huge benchmark name that is making new all-time highs. So I think you have to own the FANG stocks at this point as a money manager, and that's why charts like Apple will continue to perform very well on an absolute basis, but certainly on a relative basis. But you also have some others, by the way, Netflix and Amazon. These are the ones that have been relatively weak. They've been underperforming the other FANGs, and the mean reversion is starting to work. You're seeing those bounce higher. Those could be some opportunities as well. Chart number 2 is ServiceNow. I'm borrowing this chart from Grayson Rose. This is what we showed on the pitch. And again, go to stockcharts.com/thepitch if you missed that discussion. It was a lot of fun. And this is one of the stocks that Grayson talked about. And again, I like charts like this that have clear bases that have resolved to the upside. Again, regardless of what is happening in the market around you. I often tweet during the course of the week, public service announcement. There is always some stock somewhere that is breaking to new all-time highs. ServiceNow and others like it are the examples for today. And now is in a pretty good shape, broke above resistance there around 600, continue to push to the upside, higher highs, higher lows, and the relative strength is what's most important. You can assume, or I think it's safe to assume from a trend following perspective, those trends are in place until proven otherwise. And overall, that's a fairly decent chart. My final chart of the 3 and 3 is the real estate sector, ticker XLRE. That's the real estate select sector spider, making new all-time highs again today. You can see on a relative basis, if you look at the 11 S&P sectors, real estate is actually the 3rd top performer year to date, right? It's and I'm blanking on that. I think it's tech and energy and then real estate. That might be wrong, but real estate was definitely number 3 and technology was number 1 or number 2 for sure. But a lot of the gains in real estate really came in the first 6 months of the year. From mid-June, real estate's actually been flat on a relative basis, but making new all-time highs above 2 upward sloping moving averages. I'll be very interested talking to my guest, David Auerbach, on tomorrow's show. He's the editor of the Daily Repeat, always brings a couple particular real estate ideas. We'll hopefully talk about the real estate sector as a whole, how we should be thinking about it, but then some particular ideas that could give you an opportunity to gain exposure in a sector that has demonstrated its ability to outperform. Folks, that is our show. And again, on Monday, we love to hit the market from 3 angles, the top down, the bottom up, and the sector rotation. As a reminder, go to stockchartstv.com to catch up on all of our previous interviews. We had a lot of great interviews last week, including John Kosars. On Thursday, we're talking about his macro model and how it had just turned all bullish as of last week. Great guest coming up this week as well. So join us every weekday after the close, 4 p.m. Eastern. For our show. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a great night. Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.